It's hard to tell, and it depends what you're looking for. If you're looking for a short-term stock move, Under Armour, to give them credit, have done a great job at lowering expectations to then beat them. And stocks move, and they do well when you beat those expectations. Longer term, I think it's worth less than it is today.
We were talking just moments ago about, is this Kevin Plank, is it the COO? But actually, you think the real driving force is the head of IR because of those expectation changes.
Look at that, we're giving Lance a shout out. There you go. Listen, at the end of the day, there's an important part. We always talk about the difference between companies and stocks. And it's a great brand, there's no question. From a stock perspective, controlling the narrative and making sure that investors are going to be pleasantly surprised is very important, right? And that allows the multiple or the current multiple to be a little bit overlooked. So they've done a really good job at creating a recipe of beating now and still outlining a long-term path. I think the point we would make for that long-term path is paint the blue sky. We do. I think they're going to get great margin expansion. But at the end of the day, if it's worth less when it hits that day, that's important.
They are growing overseas, quite nicely. And that's really where the growth came from on the top line. That's a good story. The margin improvement is a good story. They've managed inventories very well. It came down 24% from last year, and they've got some hits, like the Hover right now. So what don't you like?
And by the way, the footwear was a positive surprise.
Up 8%,
I think we've been looking at, so if you think it's not just apparel this time. Ultimately, when you talk about big companies need to move the needle on the biggest part of their business, not just on the parts that are on the outskirts.
North America.
North America did not grow. And when you think about Nike, right, we always talk about Nike as a footwear direct business domestically. The DTC business hasn't grown yet. So there's some nuance there in terms of shifts that they're talking to, but at the end of the day, until you see that a footwear business start to grow consistently, North America on the uptick, and DTC, their own stores and e-commerce, you have to ask the question of what does this look like? When does the real growth kick in?
They're staying more focused on the pure sportswear than some other rival brands. Is that the right strategy to keep the brand image as pure?
So it's a great point, because I think the word that came up a lot, and I don't know how to pronounce it, premiumization or something, a lot of vowels.
Premium performance.
Yeah, and make it even longer, it sounds better. But at the end of the day, what that means is selling fewer things at higher prices. Fewer things at higher prices does not translate to meaningfully higher revenue growth. So when your margins are down here, you can get them up here. But when you're talking about, again, Nike and Adidas as your comp, that's a very long runway. It's a very different idea of how to get to that level. That level is not making it incredibly premium.
I've got Casper Worsted tomorrow, CEO of Adidas. They're reporting earnings tomorrow morning. Who's winning North America right now?
Nike is winning in a meaningful way, and then we've spoken about Lulu, who's doing a really good job.
You think Lulu's cutting into Adidas and Under Armour?
I think Lulu, if you look at sheer dollars in North America, is growing beautifully, and I think that's to be expected. They're a smaller company.